Good evening from Bangkok. My name is Lars Schmidt, and I'm the CFO of Allianz Ayudhya General Insurance here in Thailand. Last year, I was fortunate enough to be part of the RGA Leaders of Tomorrow program, and my paper on COVID-19 insurance in Thailand and the impact on the insurance industry won the first prize among a great panel of our fellow colleagues. Today, I'm here to welcome you to a panel on getting to net zero, decarbonization solutions and investment opportunities with a very exciting set of panelists from very diverse backgrounds. We have Anders Malmström, Group Chief Financial Officer of Athora. We have Megan Sharp, Global Head of Decarbonization Partners from BlackRock. And we have Mark Worsey, CEO of Aviva Investors. The moderator today will be Jessica Tan, who is the Global Head of Corporate Strategy at BlackRock. I hope you are looking as much as me forward to a very exciting discussion and to see what our panelists have to say on a very highly important topic.
Hi, everyone. Thank you so much for joining us today. My name is Jessica Tan, and I'm the Global Head of Sustainable and Transition Solutions at BlackRock. I'm joined here today by Anders Malmström, Group CFO of Athora, Megan Sharp, the Global Head of Decarbonization Partners for us here at BlackRock, and Mark Worsey, CEO of Aviva Investors. I'm going to get right to it. What is your organization committed to decarbonization, and what commitments have you made toward it? Anders, I'm going to start with you first.
Thank you, Jessica. And hello, everybody. Look, as a young group, which has really grown through acquisition of mature insurance operations, all our businesses are in very different stages right now. And I think for us at the group level, we actually issued our first sustainability report, I think this summer. And I think we're really embarking here on a journey. I think for us, I think it's still early days, but I think we really, as I said, we're embarking in a very fast speed. Overall, I think what we're currently doing is really baselining our greenhouse emission. We are very interested in understanding what it would mean if we would do a commitment. So far, we haven't made any commitments, but we're very interested in understanding what this would mean. And I think for us, it's also important, which I think is almost even more important than just the commitment itself. How would you get there? And what does it actually mean in the meantime? How do you transition to that ultimate target state? As I said, from our perspective as a life insurance company, obviously the biggest impact we have is through our investment portfolio. I think that's where we can really make an impact. And I think with that, we also work very closely with our asset managers who have a strategy as well, and also, I mean, make sure that we are aligned with what they do. But also, as I said, I mean, investment is obviously the main point, but also on the office space, I think we're moving towards what we call green buildings. I mean, our Athora Netherlands office, the new one they're going to move in is, I think, well certificated. And then also Athora Netherlands, as I said, in different stages, they actually made a commitment already to be carbon neutral by I think 2040. So as you see, I think it's various stages, very exciting time overall, and very important topic. But I think it's a journey, as I said.
Wonderful, certainly a lot to think about. Mark, I'm going to turn it over to you to talk a little bit about Aviva Investors.
Thank you, and hello everyone. So we're a bit further ahead. For many years, we've been worried about the impact on the general insurance side of Aviva, and I guess more recently on the long-term investment challenges that climate change could bring. So at the start of 2021, Aviva set out its ambition to be net zero 2040, and they've got target reductions of 25% by 2025 and 60% by 2030. And then this year, we've actually published a transition plan containing more detail on how we're going to do that, how we're going to contribute to the global transition as well as our own. We're making significant progress towards the first target, but it is, I think, important to say our approach is not simply to sell brown assets on the investment side and buy green ones, because that's not going to make any material difference to the world. So it's all about encouraging brown companies we invest into to turn green or to turn buildings we own to make them green. In an ideal world, we certainly think that we can give great customer performance and deliver net zero, but it's definitely going to be a long-term journey.
I think that's a really good point about the journey and how it's important to help these companies transition. Megan, I want to bring you into the conversation. From your perspective, can you tell us about the evolution of the decarbonization space over the past decade?
Absolutely. So those of us that have been investing in the space for about 15 years have seen a real evolution. It started with alternative energy. We all remember that. And then Clean Tech 1.0 and the challenges associated with that. Clean Tech 2.0, climate tech. And now we're using this really powerful language, decarbonization in support of net carbon zero by 2050 or sooner. What's really different now, and I do feel like the time is now, are so many macro forces. Corporations have made net zero commitments, governments, countries, cities. We have shareholders, stakeholders demanding net carbon zero solutions. We have customers that are wanting less carbon intensive products and more sustainable solutions in their own homes and businesses. Capital is available. And frankly, the technology is ready. So from my point of view, it's an extraordinary time to be investing in decarbonization because those macro forces are in place, capital is available, the technology is ready. So it's a super exciting time.
Great, thank you, Megan. Anders and Mark, I have another one for you. So reaching net zero emissions will require a transformation of the global economy. What challenges do you see to achieving that? Mark, maybe I'll start with you this time.
Well, I think there's going to be an amazing set of investment opportunities for insurers, but many of the new technologies that people are looking at, they're very nascent at the moment, and they're certainly not at the scale for big institutional balance sheets like us to make any significant allocations to. So there's a lot of watching this space for us on some of this. I mean, the regulations that we all operate under incentivize the insurers to hold large volumes of sovereigns and investment grade corporate bonds, etc. So I think one of the big challenges is actually getting those sovereigns and the big corporates to decarbonize. We wrote to central banks and finance ministers of 35 countries earlier this year, asking them to make investment plans behind their climate commitments and to implement policies to help deliver them. So that's the kind of engagement that we're doing, not just with the corporates, but also with the central banks, because that getting sovereigns to ultimately sign up, and the next stage is we're going to need transition plans from them as well. So I do think a big challenge is framing all of this area as an investment opportunity, not a cost through lower returns. And that's probably the biggest challenge I think we face.
Makes a lot of sense. Anders, love your perspective on this.
Yeah, I mean, first of all, I very much agree with what Mark just said. I think as you just mentioned, I mean, the awareness is really there. I think the willingness is really there, but I think now it really comes down to execution. How do we actually do it? Huh? It's not just saying, yeah, I do this, I do that. We actually need to do it. And I think this has multiple dimensions. First of all, it's the cost aspect. I think we need to make sure that, and I think Mark mentioned that a little bit, I think it has to be economic. Huh? And in particular, when it comes to the cost, I mean, smaller companies, for them, in particular, the initial cost might be big. Huh? So how do you bring them over the hump that they actually do it? Because ultimately it pays off. Huh? The second thing is about measurement. I think you need to have tangible ways to actually measure progress here. This is not a marketing. This is really to change, and so we need to make sure that we measure, and I think last but not least, we need to make sure that the data we have is accurate and really then shows the right progress, and we're measuring the right thing. Huh? So I think that's really kind of the key points here.
I think that's a great point. And as a follow-up, I'd love to know from your perspectives, what progress needs to be made across sectors. Not all sectors are evenly exposed to the net zero transition. So what are some of the challenges to zero emissions in the harder to abate sectors? And what's going to be the role of traditional energy? So Mark, you alluded to this earlier, so I'd love to get your views first, and maybe turn it over to Megan after.
Yeah, I think the hardest thing here is to incentivize energy companies, particularly to transition. So we do own oil and gas companies, but we're pushing them really hard to spend more CapEx on renewable technology and carbon capture and storage technology. And we've actually sort of raising the bar on some of them. We've actually told them that we will divest if they don't sign up to net zero targets. And that's not an ethically driven divestment concept. It's just first and foremost financially driven. This is prudent management of risk for clients. There is a long-term risk that these assets become stranded ultimately. So that's very much us being a responsible owner, while at the same time pushing these high emitters to change. Fundamentally, we're going to need carbon pricing or carbon taxes throughout the globe. They can't just be brought in one area. But the idea that there are economic incentives that makes the polluters start to pay for their emissions will encourage everyone to clean up the assets or clean themselves up before they become stranded, etc. So I think ultimately we're going to need carbon pricing right through the globe, and that's the big change that capitalism will then take over and actually sort things out.
Megan, would love to hear your views on the same question.
Yeah, we've all heard the numbers associated with both the challenge and the opportunity of net carbon zero. The number that we use is $4.5 trillion of investment is needed every year from now until 2050 to deliver our net carbon zero ambitions. And what's interesting about that number, $4.5 trillion every year, is that only about half of it's accounted for. What do I mean by that? Half of it is technologies that exist today. Think wind, solar, and to some degree, EVs, although EVs still has some innovations that are associated with EVs themselves or the surrounding infrastructure for us really to have the widespread adoption that we need in transportation to reach net carbon zero. So the other 50% of that 4.5 trillion that's unaccounted for, that we're going to need to deploy those dollars in those hardest to abate sectors. And these are everything from materials like concrete and steel to clean energy. So I spent the last 12 years at BP, and we invested almost entirely in those 12 years in the venture capital space, supporting the energy transition. So in my point of view is the energy majors are critical to participating in the energy transition. And when we look at net carbon zero, so many of the innovations that are required touch energy. About 75% of what needs to happen to deliver net carbon zero touches energy in some way, shape, form, or fashion. So a lot of the historic industries, like the oil and gas industry, are our partner in the journey to net carbon zero and need to be our partner to deliver that energy transition. So I think they're a really important part of the solution.
Thank you, Megan. So the next question here is, as you think about how far the alternatives industry has come and where we're going in regard to investing in this net zero transition, what excites you the most? And Anders, I'll turn it over to you first.
Yeah, thank you, Jessica. Yeah, look, I think overall, we're actually very excited that we see more and more investments being directed in that segment. I think, as you know, we have a strong arm on the alternative side. I think it allows us to actually work with smaller companies in order to really increase their understanding and kind of discussing also the importance of this transitioning. I think we also have in the private sector, probably it's almost a bit, in a way, almost easier to really tackle the key points and making sure that the impact of the investment is really returning what you expect. I mean, and I can just give you an example. I think one particular fund is an infrastructure opportunity fund. It holds more than 80% renewables. So I think it's a key topic for us, and we actually believe in the private sector we can have even more impact than just going through public vehicles.
Mark, would love your view.
Yeah, maybe I should give some examples of things we're actually doing right now. So we've got a real assets fund which is fully net zero aligned. And that's set up for insurance investing directly into real estate, infrastructure, forestry. And as technology comes to scale, something I mentioned earlier, that's where we can really step in and invest in new technologies. Today, the focus is really on buying brown buildings and making them green, and converting a building to be electric, to have really high energy efficiency, is a fantastic way of adding value at the same time as taking down the carbon emission. And you heard earlier that Anders says, we're looking to be in buildings that are low carbon, and that's the demand that we're seeing out there. So huge potential with buildings. Electric vehicle charging points. We've just invested 110 million in infrastructure across the UK to have a huge increase in the number of charging points, and that's a great example of new technology that we're going to need, and new infrastructure we're going to need in order for all the countries to move to be much more electric on the transport side. In forestry, we've invested in 3,000 hectares for afforestation, and we're looking to capture 1.4 million tons of carbon over that project lifetime. And then in our loan markets, Anders mentioned the private markets are almost easier in some senses, and there we've created a whole transition loan framework where borrowers, if they agree and sign up to improving the carbon emissions, we actually give them a lower yield on the borrowing. So we're actually encouraging them to go green, and that works from our perspective because actually they're going to be a lower credit risk if they follow that route as well. So it really is a win-win for everyone. So loads of great things going on across the portfolios. I've mentioned quite a lot there in the private market space. We're doing it right across all markets.
Seems to be such a big growth opportunity. Megan, maybe I'll ask you the same sort of question to build on what Marcus just said. So from your perspective, what are some of the types of innovative investments that you've seen that have the potential to scale and really accelerate the energy transition? Would love to hear a few examples from you.
Thank you for the question, Jessica, and I'd be happy to. And it really references to some of the other opportunities that and discussions that we've heard from all the panelists today. Some of the sectors that we're really excited about and want to see investments go into are things like carbon capture, utilization, and storage. We think CCUS is a really important part of the solutions because a lot of the technologies will bring the carbon intensity down compared to their more carbon intensive counterparts, but it's very hard to get to zero. So we're always going to need some point source collection of CO2. So CCUS is really important to us. Second, advanced mobility. As I mentioned in my earlier comments, EVs, in some ways, we see them everywhere. They seem really prevalent, but we need widespread electrification across the transportation sector in order to really reach net carbon zero. So advanced mobility solutions are really important to us. Third, clean energy. Again, we've talked about wind and solar, but we're also going to need things like hydrogen, clean hydrogen. And fourth, we're really interested in bio and low carbon products. There are so many petrochemical-based materials in every aspect of our lives, from the chairs many of us are sitting on, to the clothes that we're wearing, to the materials that our cars are made of. And so we're really interested in finding new materials that are sustainable and decarbonized. Fifth, we're really interested in carbon management solutions. This is so critical to truly decarbonize the world. We are going to have to measure the carbon that is emitted into it from various processes, track it, understand provenance, have the right auditing features. It's going to be a really critical piece of the success story to net zero. And finally, the digital transformation is a really important area of investment. A 2050 world, a net zero world, is a smart world, and it's a connected world. We're going to need the digital infrastructure to support that 2050 world, so that the hardware we're investing in today is optimized and as efficient as possible.
Well, thank you. I think that's a great way to end. I'm incredibly motivated by what I heard today. A lot of where this is going is about good risk management. And it's also about opportunities. And there seem to be a lot out there to unfold over the next couple of decades. So I want to thank my panelists, Megan, Mark, and Anders. Really learned a lot from your insights today. And thank you all for joining us.
Thank you very much to our panelists for a really interesting discussion right now. I hope everybody enjoyed it as much as I did. The first key point that I find really interesting right now, listening to our panelists, is that there was a lot of talk about investments and how insurance companies can help towards carbon neutrality through investments. It was Megan who actually pointed out that we need 4.5 trillion US dollar per annum until 2015 to get to net zero, a number that I personally find truly shocking and interesting to hear. At the same time, Mark pointed out that for insurance companies, it can be quite difficult actually to invest in carbon neutrality because our regulatory environment often requires us to invest into larger companies and not startups, which are in this field most common. Very interesting point, very challenging environment for us to work on. Megan, on the other hand, said capital is plentiful. That is good news. But again, we need to find out ways in insurance companies how we can use this for carbon neutrality. One point Anders raised, which I found really interesting, is that actually costs are very large to help towards carbon neutral. At the same time, however, it's very difficult to measure how much reductions have been done. This point is one that also Megan again highlighted, and that her company is one of the top technologies that they're interested in is how do you track and measure carbon reduction while at the same time having substantial investments in this area. Another point very relevant for energy companies. Mark said that energy companies are the absolute key to help us to reduce carbon emissions. But again, we also need to, as an insurance companies, find ways to incentivize energy companies and work with them to reduce their carbon footprint. Overall, I thought it's a very, very interesting and exciting discussion. I really enjoyed the points raised by all panelists, and I hope so did you as attendees. And would like to say thank you very much again to everyone to participate.